Organon came to my radar as I looked at Warren Buffett Berkshire Hathaway's portfolio recently. This pharmaceutical company is a spin-off from Merck that just began trading in June 2021. Since Berkshire owns Merck, it inherited shares of Organon from the spin-off. However, since its listing in a stock exchange, its activity has been pretty muted to date. Very quickly, understand that Organon is a science-based pharmaceutical company that develops and delivers health solutions through a portfolio of prescription therapies. Post the spin-off from Merck, Organon will inherit a line of 64 products and 6 manufacturing sites. On a pro forma basis, it generated a revenue of about $6.6 billion and an adjusted EBITDA of $2.8 billion in 2020. Unlike most pharmaceutical companies whose revenue are concentrated in the US, Organon's sales are distributed pretty evenly across the different regions in the world. The company segregates its operations into 3 key segments: established brands, women's health, and biosimilars, with established brands being the key driver currently, contributing about 70% to its top line. I will not go into the details of the specific drugs or products offered by the company, as they offer a wide range of therapy, from tackling women's related conditions such as fertility issues and birth control contraceptive measures to more general cardiovascular and respiratory treatment. And as with general pharmaceutical companies, Organon's key competitive advantage is derived from its patented products, though the company is increasingly targeting growth from its biosimilars segments. If you want to understand more about its business, you can read more from Organon's investor relations site, in which I will put down a link in the description below. In this video, I just want to bring to your attention the potential investment opportunity here by understanding the reasons why Organon's valuation is depressed currently, and with that, understand why the market should revalue the company at higher valuations moving forward. So, as discussed earlier, Organon's share price remains depressed since it started trading in the stock exchange. Other than the fact that it's a newly spin-off company, which could mean lower interest from legacy shareholders who are more keen in the parent company Merck, and lack of new buying interest due to absence of marketing and trading history, there's one key factor why the market seems to be penalizing its share price. And that will be due to the fact that established brands revenue has actually fallen rapidly over the past few years, from $9 billion in 2016 to just $4.5 billion in 2020. This decline is a result of the loss of exclusivity as patents of its branded products expire. As we saw earlier, the established brands segment makes up 70% of Organon's revenue currently, hence it is no wonder why the market is penalizing its share price on the worry of further erosion to its top line. However, management indicates that moving forward, the loss of exclusivity impact should be less substantial, targeting a cumulative amount of about $250 million loss expected from 2021 to 2025, as the loss of exclusivity risk will largely be behind. So now the question is, if the company will be able to fill the gap of the deteriorating revenue from its established brands. To determine that, let's examine its women's health and biosimilars operating segments. While Organon projects its established brands to stabilize and decline marginally in the long term, management forecasts low double-digit growth in its women's health and biosimilars operating segments. Combined, they expect overall revenue to grow at low to mid-single-digit levels. Take a look at the latest second quarter 2021 earnings. We saw a 16% increase excluding forex impact in women's health segment revenue from $350 million in second quarter of 2020 to $417 million in the second quarter of 2021. Its flagship product Nexplanon, a long-acting reversible contraceptive, is continuing to see strong growth momentum. Hence, I believe a long-term low double-digit growth in this segment is achievable. As for its biosimilars operating segment, we saw a 43% increase in revenue from $60 million in the second quarter of 2020 to $86 million in the second quarter of 2021. Though it is currently contributing a relatively small pie to Organon's top line, the market for biosimilar is poised to become a large segment of the pharmaceutical market, driven by large molecule patent expirations over the next few years. We will not go through the specifics of the different products from each of the segments, but overall you can get a good idea from the latest earnings results here that the management's long-term projections of low double-digit growth in its women's health and biosimilars segments seem to be on track. In the near term, we are likely to continue to see high double-digit growth in its women's health and biosimilars operating segments, but to be conservative, let's just use 10% growth rate for illustration. At a pro forma combined revenue of the two segments at $1.9 billion in 2020, a 10% growth will amount to about $200 million in additional yearly revenue in the near term. So I would say that Organon's growth drivers will be able to compensate for the losses due to the loss of exclusivity impact and perhaps buffer for any further erosion due to competition in its established brands. Now let's take a look at the company's balance sheet. As of the second quarter of 2021, cash and cash equivalents were $730 million. Debt was $9.348 billion. Therefore, net debt will come in at $8.618 billion. Taking the midpoint of management's guidance, we can expect Organon's adjusted EBITDA for the full year of 2021 to come in at around $2.31 billion. Thus, net debt to EBITDA ratio will work out to be about 3.7 times. That's a pretty modest debt level, though the company is still focused on deleveraging for the first 12 to 24 months post the spin-off, and the long-term leverage is targeted to sustain below 3.5 times. Now let's take a look at Organon's valuation. Understand that year to date, for the first half of 2021, the company had already clocked $826 million of earnings or $3.25 earnings per share. Hence, I think consensus earnings per share estimate for the full year of 2021 of $6.02 is quite achievable. At the current share price of around $34, price to earnings ratio will work out to be about 5.6 times. That's quite an attractive valuation given that there is no excessive debt or specific regulatory or legal risk at the moment, and we also saw that Organon's growth engines in its women's health and biosimilars segments should be able to fill the gap of the declining revenues from its established brands. While pharmaceutical companies trade at a wide range of PE ratios, average multiples should come in at the mid-teen levels. Once there's more certainty in Organon's top and bottom line trajectory and they continue to deleverage, we can expect the market to value the company at a higher multiple. At a PE of just 10 to 12 times, we can expect its share price to 2x to the $70 range. To sum up, Organon, the overlooked Merck Spinoff, presents a compelling investment opportunity at the moment, with the potential for its share price to 2x from the current level moving forward. With this division on championing women's health, coupled with the existing strength of products already changing the landscape of therapies for women's related conditions, the potential for growth is huge, especially with the experienced leadership team formed from the Merck spin-off to steer its business in the right direction moving ahead. And we saw that the recent growth in its women's health and biosimilars segments should be able to more than compensate for any further decline in revenue in its established brands segment. Apart from the obvious competitive advantage in the patents it holds, Organon's global scale and capabilities will enable them to be a commercialization and distribution partner of choice for smaller players. Therefore, I believe that given the strong record of its business, the current valuation presents an investment opportunity. Hence, I'm adding some to my portfolio and will add more if its share price corrects downward further. Let me know your thoughts on this and share with us in the comment below, and consider subscribing to the channel if you find what I share with you today is useful. In the meantime, check out the recommended videos here to continue learning so that you can make better decisions. Keep learning, and I'll see you next time.